we had a scheduling error because my co-host Josh is actually starting a vacation. So I apologize. This was supposed to go live at 1 p.m. Eastern Standard Time, which it is right now, not 11 a.m. So over the next few weeks, I will be solo and we will be joined by our new market intern, who I'm excited to introduce as early as next week. He's just getting up to speed with how we kind of do things on the in the back end for TTI. So next week, we're going to have a new face. He's going to be co-hosting with me on these reports, which is going to be fun to be able to talk through some ideas and separate types of trades with this individual. I think you guys are really going to love him as well. So for today, the episode, actually, I want to deviate slightly. It's obviously going to remain on topic for crypto, but I do want to deviate slightly because we had a really, really good conversation earlier today inside of the Discord about crypto, but particularly Bitcoin in general and its relationship with some of the assets that are trading against it. Mainly the dollar, through the dollar index, the Dixie, some of the relationship qualities between Bitcoin and some of the other TradFi assets or parts of the market. And it really got the wheels spinning because for me, this is kind of secondhand nature. And although we've referenced this loosely, there hasn't really been a piece of content that we've put out that shows you exclusively why we are saying things like, hey, when the dollar is going up, generally risk assets are not going up or there's a headwind. And Bitcoin is that risk asset. And conversely, if you're looking at Bitcoin as just a specific crypto trade in 2024, maybe it's not the right way to look at it. So let's go ahead and explore both of those. We're going to segment them out. We're going to start with this dollar idea. So the general idea right here is, once again, this is going to be Bitcoin focused, not necessarily other asset focus, but we're going to have to go ahead and look through some of these other assets first to build this narrative. So the dollar over the last few years has had an inverse correlation, right? An inverse correlation to the broader risk on TradFi market, meaning when the dollar is moving up, when it's gaining speed, when it's breaking out, generally the broader market, but particularly the higher beta parts of the market, the growth areas, the tech, the consumer discretionary, the communications, those areas of the market either get hit and start coming down, or at the very minimum, they're facing a significant headwind. It's like trying to swim upstream. You might get there, but it's going to be a hell of a lot harder than if you're swimming with the current, right? So the dollar over the last couple of years, and by the way, this is not a historical relationship. As a matter of fact, for an extended period of time, the dollar and stocks tend to move together. We had a decoupling of this, which happens every few decades where these relationships flip-flop. And now the question is, as the dollar starts to find support here, what do we expect with the broader market, right? So remember, the relationship here is when the dollar starts to break down, the market should find some sort of juice to start breaking out, getting momentum to the upside. And then when the dollar starts to break back up, which who knows, it could be, or we could be breaking out of this range, the market probably is going to be facing some headwinds. I don't want you to take that at face value. I'm going to prove it to you really quick, right? So what we're going to do here is we're going to look at a comparison chart between the US dollar, and we're going to use the Qs right now. And you're going to understand why we're using the Qs in a little bit. So we're going to use the NASDAQ, and we're going to look at the overall performance of the NASDAQ against the overall performance of the US dollar index. And we're also going to throw a correlation coefficient on top of it with the Qs so we can see exactly mathematically the correlation. We're going to bring this out to the weekly so it's a little bit more smoothed out. You're going to notice since over the last 2 years, at some point in the last since 2022, 2.5 years now, we've been in a relatively inversely correlated relationship, meaning, once again, that when the dollar goes up, the market tends to go down, or at the very minimum, it's harder to hit higher highs. And when the dollar comes down, the market is generally ripping, right? We can see this using a simple correlation coefficient indicator. The closer you are to -1, the more inversely correlated, closer to 1, the more positively correlated, and somewhere in the middle is they're not correlated whatsoever, right? So over the last 2.5 years, more so than not, the TradFi market has been inversely correlated to the dollar. Now, what do you expect to happen if we change this correlation to Bitcoin? Well, you wouldn't be here right now if it was going to be a good answer. It's going to look relatively the same, right? And if we actually look at this and change it all, you're going to see that basically over the last 2 years, once again, we've had this inverse correlation between the dollar and Bitcoin in particular. So think about this really quick. If Bitcoin is a crypto, which should not have really any correlation to the TradFi market, which is what most people assume that are trading crypto, I would argue that you're wrong, that actually, and Bitcoin to a stronger case can be made for Bitcoin instead of outside of, BTC. You're looking at altcoins and some of the micro caps and stuff. That is going to be very little correlated to anything, except maybe liquidity. But the majors, particularly Bitcoin, is going to follow this relationship with the dollar, meaning when the dollar is ripping, Bitcoin's probably not going to have the best time. And when the dollar is dying, Bitcoin has a better shot at ripping, right? It's same correlation as the Qs. So take that into consideration where we're at right now with the dollar at the bottom of a range. Do we break the range into new lows? Or do we bounce for the third or fourth time in the last couple of years and start finding our way back up to the 105 area? If that's the case, I would assume that not only Bitcoin, but risk on assets in general are going to have a harder time hitting higher highs. It's not impossible. It's just going to be harder. If it breaks down below range low at around 100, I think we get a free fall effect into risk on assets, including Bitcoin. So that's the first portion I wanted to just kind of show you guys, that there's an inverse correlation to the US dollar when it comes to Bitcoin and risk on assets and the performance of the dollar. Now, the second thing I want to show you really quick, we're going to go get rid of all of this and we're going to start over because I want to start fresh. Whoops. Let's go ahead and bring this back. Let's get rid of the inverse correlation though. Let's get rid of the comparison. So let's go over to BTC USD. Right. So once again, I had alluded to everybody wants to be trading Bitcoin or crypto in general, expecting that you're not trading a TradFi vehicle, right? You trade crypto because you don't want to trade TradFi, as a matter of fact, right? You don't trade Bitcoin and crypto in general because it moves way quicker than the TradFi markets. You don't trade it to make 1% to 2% per day or week. You're looking for multiple, double-digit moves per week, which you can get in Bitcoin. As a matter of fact, ADR is 12.16%. Against the Qs, which are only 3.86, which is still relatively high, by the way, for an index, but because it's a higher beta index, it makes sense, right? So BTC USD, we're coming back here. So everybody wants to be trading crypto, but Bitcoin in particular, to get away from the TradFi market. What happens if I told you a very basic relationship between Bitcoin and the NASDAQ shows you that this is essentially a leveraged TradFi trading vehicle at this point? It's no longer this fringe crypto-only type of play. As a matter of fact, Bitcoin tracks the TradFi market a hell of a lot more than what most people want to admit. So if you're trading crypto, I think by the end of this short conversation, we might be able to say you're actually just trying an extension of the TradFi market. When we map out from the absolute lows here, don't have to be perfect, but the absolute lows here, between the NASDAQ and the BTC USD based off of the Coinbase price, you can see that they react relatively the same. Now, obviously, BTC has deviated slightly over the past couple of months, but still, you can tell that they're pretty similar. When the Qs go up, Bitcoin goes up. When Bitcoin comes down, the Qs go down. That's not on accident, guys. Bitcoin is becoming very, very correlated to the TradFi market, but in particular, the Qs, the NASDAQ. Once again, we can run this correlation coefficient. We can just run the Qs here, and we have on our side math. The closer to 1, the more highly correlated this stuff is to each other. So once again, if you're trading Bitcoin, you are inherently trading the NASDAQ. The difference is the ADR, right? The volatility is about 3 or 4 times as much on Bitcoin as it is on the NASDAQ side. So if you're a professional trader, you run a hedge fund or you manage money professionally, you have an active fund, you are viewing Bitcoin as not this separate entity anymore. This is a risk on asset that gives you exposure the same direction as the Qs, but you're levered up, right? So when we see that the NASDAQ is breaking out potentially into new all-time highs, it's really hard to want to get very bearish Bitcoin. I'm not saying Bitcoin has to break out here and be $100,000 a coin tomorrow. I still think we're on a trajectory to be there. I think we're going to be at 100,000 before we sniff 40,000 again. I have no idea when it's going to happen though. But I will say that if you are bullish the broader TradFi market, in particular the higher beta growth areas, it makes sense to want to have some exposure into Bitcoin, right? It's leveraged by 3 or 4 times TradFi trading product at this point. And all of the math there supports that level. So if you're trading Bitcoin thinking that you're outsmarting TradFi, or if you're trading Bitcoin thinking that you don't want nothing to do with TradFi, understand that you are legitimately trading an extension of the traditional financial markets. You're just using Bitcoin instead of some sort of leveraged NASDAQ product, right? It makes sense. So we had this conversation earlier today inside of the Discord. It really opened up some eyes for a lot of people because they, particularly the guys that maybe this is their first cycle trading Bitcoin, you kind of start going down the rabbit hole and, crypto is so much superior to trade and everything else. And while there's a lot of opportunity in the crypto space to trade, because of the volatility, it doesn't necessarily move independently from the TradFi market. So they are one in the same in certain regards, right? If you're bullish the TradFi market, you're probably underlying bullish the Bitcoin market. If you're bearish the TradFi market, you're probably inherently bearish the crypto market, or particularly the Bitcoin market itself. And that makes sense from a mathematical standpoint, right? So over the last week or so, Josh has come out with a crypto report, and we've kind of been talking through some charts. There's really not a whole lot going on since the last time we met and talked about crypto. We're still in this sideways consolidation range for a lot of these megas, the majors, right? The Bitcoin, the Ethereum, the BNB, the Solana, etc. We're not accumulating anything more here. We're waiting for sustainable breakouts to occur, but we are within the camp that these things are probably going to continue to break out. We just don't want to try to front run them because so far it's been a pretty challenging type of trade to front run these things. I still personally believe Solana is the winner here of this cycle. It's held up the best. It has the cleanest chart for a new breakout above 205. I really like it. I'm going to continue to get long Solana. I have no current long position on the books right now. I've traded this thing 3 or 4 times this year. All of them have been wins, although I did take a little bit of a cut on unrealized profit by waiting to stop out, expecting a bigger move, but that's okay. It's all part of the game. That's why I'm not willing to front run any of this stuff, right? So I'm really excited for the Solana trade winner if it does get up there. The Ethereum trade is the one I'm least excited about. We still have the chicken scratch from last Friday when we were talking about, I don't know what the 200-day moving average is going to look like when I delete this, but kind of expecting a sort of a rollover here. And, we're starting to maybe form that a little bit. The 200-day moving average is still technically sloped up, but this is the most bearish of the major charts. Ethereum does not look great whatsoever. Then you have your BNB coin, and shout out, by the way, the CEO of Binance out of prison and moved into a house arrest in California. So we'll see if that if that causes BNB to absolutely shoot through the roof here. We want to get long above 670 on an absolute all-time high breakout. And then once again, just Bitcoin underlying, you got to be long this above 70K. You got to put some juice in here. Once again, it's a leveraged NASDAQ trade 3 to 4 times. It's not a bad trading vehicle, guys. Just really difficult if you're expecting this to break out on any given day. You're trying to time the bottom or time the top. This thing is just going to continue to churn until it doesn't. So why try to sit here and front run it? All right. So once again, I apologize for the scheduling error. Next week, we're going to be live again, I believe, at 1 p.m. Eastern Standard Time. Subject to change, but I believe so because our co-host Josh is going to be gone for about a month on vacation. So shout out to Josh. He's going up to the Arctic Circle, I believe, and going camping up there. So that's going to be fun. He'll be on Starlink. He'll still be providing us our crypto reports, but I don't think Starlink up there is going to be able to stream. So we'll see. If you have any questions regarding anything we went through, particularly about the dollar and the Bitcoin relationship, and then Bitcoin and then TradFi, particularly the NASDAQ relationship, feel free to leave them below on the market research portal, and I'll go ahead and ask them. It's a really interesting topic to talk about. It also changes the dynamics of how you should view these trades. And if you're building a portfolio, maybe you don't want to over leverage yourself in Bitcoin if you're already over leveraged in the NASDAQ trades, right? That would create a lot of concentration risk knowing that they both move relatively the same direction. My name is Hamilton. I'm here at the Trading Initiative. I hope you enjoyed this week's crypto report. Once again, if you have any questions, leave below. I'll answer them as they come in. Enjoy your weekend, folks.